A very good morning. My name is Nur Afika binti Hamzanizam. My ID is SMK220700134. And today I will be explaining about the first question. So the calculated ratios for Seri Meru Sdn Bhd is, the current ratio is 3.81 times compared to industry average, which is 2.5 times. And then the inventory turnover ratio is 2.66 times compared to industry level, which is 4.5 times, and average collection period, which is 101.7 days for the Seri Meru Sdn Bhd compared to industry average, which is 80 days. And then we have non-current asset turnover, which is 5.36 times compared to the industry average, which is 4.1. So we continue with the total asset turnover, which is 1.34 times for the Seri Meru Sdn Bhd and 1.5 times for the industry average. Then we proceed to the debt ratio, which is 29.1% for the Seri Meru Sdn Bhd and 22% for the industry average. Next is net profit margin, which is 9.43% compared to the industry average, which is 10%. And then the return on asset, which is 12.61%. when compared to the industry average is 15%. On the 10th ratio, which is return on equity, is 17.78% compared to the industry ratio, which is 90.23%. Next, for the question 1, second Roman, I will explain to you about the firm's liquidity, leverage, probability, and asset management ratios. So, firstly, the Seri Meru Sdn Bhd current ratio is proven to be higher than the industry average. This means that it has high liquidity and are able to meet its short-term obligations. So, the next is the non-current asset turnover ratio in Seri Meru Sdn Bhd is much higher than the average industry. So, this means that the firm has been using its assets effectively and optimally for generating sales. On the other hand, the total asset turnover for the Seri Meru Sdn Bhd is lower than the average industry. So this means that the firm has not been using the total asset effectively to generate itself. So the next is the non-current asset turnover ratio in Seri Meru Sdn Bhd is much higher than the average industry. So this means that the firm has been using its assets effectively and optimally for generating sales. On the other hand, the total asset turnover for the Seri Meru Sdn Bhd is lower than the average industry. So this means that the firm has not been using the total asset effectively to generate itself. So the next is, I will explain to you about the financial leverage ratio of the firm. So this includes the debt ratio, which is higher than the industrial average. This means that the firm have high debt used in the business compared to other industry average. So this makes it harder for the firm to borrow money. Next, we see that the times interest earned is higher compared to the industry average, which means that the firm itself present less risk towards their investors compared to the industry average. So lastly, I will explain to you about the profitability ratios, which includes net profit margin. So the firm has higher net profit margin compared to industry average. This means that the firm is less efficient in converting sales into actual profit compared to industry average. Next is return on asset. So they have lower return on asset compared to the industrial average. So this means that the firm is less productive and efficient in utilizing its asset to gain profit. So, for the third Roman of the first question, which is the reason for the weaknesses and recommend appropriate actions to be taken to improve shareholder wealth, is firstly, Seri Meru Sdn Bhd is shown to be slow on restocking its inventory because the firm has a low restocking rate. So, this can be a sign of weak sales and excess inventory, which is resulted in less frequent restock. This could indicate a problem with the company's chain merchandising strategy or inadequate marketing. So, to solve the issue, it is recommended for Sri Meru Sidiam Berhad to use inventory management software to ensure maximization utilization of inventories to increase sales without wasting capital or making unnecessary risk. So, the second weaknesses is Sri Meru Sidiam Berhad is shown to be collecting its debts lower than the industry average. This is alarming due to the fact that the firm is unable to maintain a level of liquidity which allow it to pay immediate expenses because of the late debt collection. So, for this weakness, we recommend for the firm to offer a discount for faster payment so it can shorten the average collection period while still have a good relationship with the customer.
Hi everyone, my name is Nofarisa Akila binti Samsutapa. My ID number is SMK22070136. I will answer question number 2, Roman 1. So, we need to analyze about the trend revenue, net income and expenses over the last 3 years for Tesla company. I will go through to the trend revenue first. The company's revenue has been consistently increasing each year, which is a positive sign. In 2020, the revenue was $31,536 and it increased to $53,823 in 2021 and further to $81,462 in 2022. This means the company is generating more revenue each year, possibly because it's growing or doing better in the market. It's important to note that nominal revenue growth, which is just the increase in revenue, doesn't account for changes in pricing or costs. Increasing revenue at a real rate 10% may require the company to invest in more inventory, equipment, and employees. Overall, the consistent increase in revenue is a positive trend for the company.
Assalamualaikum, my name is Nuzuleka binti Maksani. My ID number is SMK22070138. For net income, as you can see, in 2020 we got $862. In year 2021 we got $5,644. In year 2022 we got $12,587. The company financial performance has been consistently improving over the last 3 years, especially in terms of net income. In 2020, they made $862,000, which then jumped to $5,644,000 in 2021, and further increased to $12,587,000 in 2022. This positive trend suggests that the company is doing well financially, likely due to better cost management, increased sales, or a mix both. This growth in net income usually happens when a company sells more or finds way to increase the revenue. To get a clearer picture, it would be interesting to look into the company's sales data and figure out what exactly contribute to this significant boost in earnings during this period.
We will move on to the last one, which is expenses. Tesla spending has been a bit up and down. In 2020, they spent $4,636 and then it dropped a bit to $7,083 in 2021. But in 2022, it went up again to $7,197. The drop in spending from 2020 to 2022 might mean Tesla tried to save money or run things more efficiently. They could have streamlined operations, renegotiated contracts, or found ways to cut costs. However, the increase in spending in 2022 suggests either these efforts didn't stick around or new expenses came up. That's all from me. Thank you.
Hi, Assalamualaikum. My name is Nuriana binti Muhammad Bakri. My ID number is 22070139. So, for question number 2, Roman 2, the question is, what factor do you think contribute to any significant change in this financial metric? So, the answer is, according to the research result, there are several factors that have contributed to the significant change in Tesla financial metric. So, some of the factors are operational improvement. Ability to increase its operational has led to an increase in net income. As Tesla continues to expand its manufacturing capacity, is operate very high revenue and profit. Next is through the direct to consumer, which is DTC model. Tesla direct to model has a direct impact on its bottom line by bringing in internal profit. By selling vehicle directly to consumer, Tesla can avoid markup, which can increase its profit margin. Other than external factor, which is high inflation, high interest rate and economic recession can also impact Tesla financial performance. This factor can affect a consumer demand, affect a production cost and impact a Tesla financial stability. Lastly, competition in the electric vehicle industry. Change in the competitive landscape have the potential to impact Tesla market and profitability. As more companies enter the electric vehicle market, competition is intensifying, which could affect Tesla pricing strategy, market position, and financial performance. Accurately, assessing Tesla intrinsic value is critical to making an investment decision, and factors such as a yield rate, profit margin, risk-free rate of return, and discount rate are taken into account when calculating that intrinsic value. Therefore, by considering this factor, investor can better understand the potential risk and reward associated with investing in Tesla stock. So, that's all from me. Thank you.
Hi, my name is Wan Muhammad Anik Zaim bin Wan Muhammad Asri. My ID number is SMK220704141. So I will answer question number 3. For the first question is differences between trend analysis and interfirm comparison. The first is focus. Trend analysis focuses on studying data to identify patterns or trends in the performance of the specific security such as stock or bond over a given period of time. Interfirm cooperation focus on comparing and evaluating different companies within the same industry or market in relation to one another. For the second is purpose. Trend analysis aims to make investment decisions based on the identified pattern or trend in a security historical data. For the interfirm cooperation, help assess a company's performance relative to its competitors and industry benchmark and identify areas for improvement. For the third point, data use. Trend analysis relies on the past information of a specific security, including price history, trading volume, and other relevant factors. For the interfirm comparison, compares and analyze data of the various companies such as financial statement, market share, customer satisfaction score, and product offering. For the last is time frame. Trend analysis typically look at historical data over a longer time frame, ranging from month to year, even a decade, to identify long-term trend and pattern. Last, interfirm cooperation can be concluded across different time periods, depending on the analysis goal, to evaluate how companies have performed relative to one another. I will continue for the second question. There are challenges and constraints that needs to be considered. Here are some key challenges and examples. For the first is historical information. Historical data used in ratio analysis provide insight to past trend and performance. However, it may not fully represent the company's current or future situation. For example, a company profitability ratio might have been high in the past due to favorable market conditions, but economic downturns could impact future profitability. Second is changes in accounting policy. If a company changes in accounting policy, it can significantly affect financial reporting and ratio comparability. For instance, a shift in depreciation methods can impact asset turnover and profitability ratios.